right, policy turmoil, rising yields, and economic uncertainty all have your next guest looking to protect his portfolio, which means your money. He says that as the choppy trading continues, and he's turning to a specific basket of defensive names. Let's bring in Chris Senyek. He is chief investment strategist at Wolfe Research. Chris, good to see you again. What is in said defensive basket?
Yeah, hi, Brian. Thanks for having me on. So in a more defensive market, which we think will be in at least over summer and the fall until we get more clarity on tariffs and this tax bill, we'd hone in on companies that have consistently bought back their stock each and every year for the last 10 years, almost a buyback aristocrats, if you will. These are high quality companies that if there is a downturn temporarily in the market, they're in there buying the stock each and every day. It really spans a whole swath of companies, from Honeywell, Union Pacific, Northrop Grumman, to Visa, MasterCard, and even Cardinal Health.
Yeah, okay, they're all very different names. I mean, I'm trying to figure out something that might put, ADP, the payroll company, with UNP, the train company, and Cardinal Health. Is there anything that these companies have in common? 'Cause there doesn't seem to be at first glance.
Well, the thing they have in common is they're very good at capital allocation and returning cash to shareholders. So that's the first common thread.
Okay. Good management. Good management,
resiliency of earnings generally, right? ADP is not going away, and neither is Honeywell or some of these other names. And then some have the added benefit, although not all of them, of some secular tailwinds.
Yeah, we're looking at Union Pacific right now. So Union Pacific, I mean, this is, when the tariff news hit, all the transports, rail included, Chris, got whacked hard because they carry stuff across the country. And if there's less stuff to carry, they make less money. Doesn't sound like you're that worried about all this tariff stuff we talk about every day.
No, these are companies, Union Pacific and the rails more broadly are companies that have monopolies, right? And Warren Buffett obviously owns one of them, and their names are going to be around for the next 50 years. We have to carry goods. What their earnings do in the next 6 months because of tariffs and bounce around doesn't smooth out the long-term effects. So these are high-quality companies that generate a lot of cash flow and have done the right things with respect to capital allocation.